Guys, this was my recent midweek update on July 13th, 2023. So you are seeing 4497 and 4527. And if you see on the chart, then S&P 500 hit exactly .4527 on Friday. And after hitting 4527, it became unstable and then it turned red. So in order to see that the S&P 500 is going to hit 4527 by Friday, it was very much clear that the PPI data and the core PPI data and some supportive data must either come positive or neutral, but it must not be negative. What happened is that the PPI data, it was negative, but the core PPI data, that was positive, or as per the expectations of the Wall Street. This the PPI data and the core PPI data, the stock market accepted this data as neutral. And because a day before the PPI data, the CPI data, the inflation data was published, and that gave a very heavy bullish push to the stock market. Because of that, the S&P 500 was able to hit 4527.4527. Now the coming week will be very interesting, because now the S&P 500 has reached to the levels, as well as the Dow Jones also has reached to the levels wherein the indices and the stock market is expected to show some different kind of behavior. Now the reason is that 4527, yes, this is one part, this itself is very strong. Then just after 4527 we have 4537. Now if you look into this, the chart, we have 4818, this is the all-time high of the S&P 500. Then we have 3491, which is the low of the recent last year, the low that the S&P 500 has formed in 2022. So the Fibonacci retracement from high to low, and then you see this is the 78.6% of the Fibonacci retracement level, and again it is very important. So we have 78.6% Fibonacci retracement level. That level is exactly at 4534. This 4537 is my calculated resistance level. So we have 4534, 4537, 4527, and recently we have seen that on Friday it hit .4527 and came down. It failed to sustain and to retest the 4527, and it failed to breach the 4527, right? However, this is not the entire picture. The rest of the picture, it will come through the Dow Jones. And whatever I have mentioned here, we knew this thing before the open of the stock market yesterday on Friday. So this was my pre-market update to my community members, and I have mentioned this thing very clearly, that no matter what, the zone of 4527, 4537 must be respected in a manner that the S&P 500 must spend a few days, minimum 2 to 3 days at this zone, and show its reluctance to clear the zone. So these are the daily updates, the daily analysis of the S&P 500 that I give to my Patreon community members. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, this is the S&P 500 technical analysis from July 17th, which is Monday, through July 21st, that will be Friday. So now I am going to discuss the agenda of this S&P 500 technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart of S&P 500 as such, nothing new. But yes, definitely something very important is happening and has happened in case of the Dow Jones, the weekly chart of the Dow Jones. So this is what I am going to discuss in this, the first point of the agenda, particularly the weekly chart of the Dow Jones. And there is a bullish engulfing. So the weekly chart means the big picture, what is going to happen in the near future, okay, like in a week, in a month, okay, or so. Then the second point of the agenda is the S&P 500 support and resistance levels. So the support and resistance levels means, so yesterday I mentioned 4527, not just yesterday, even last week also, last week also, 4527 was very much clear that as soon as 4527 comes into the picture, S&P 500, no matter what, the zone of 4527 through 4537 must be respected in a manner that the S&P 500 must spend a few days, minimum 2 to 3 days at this zone, and show its reluctance to clear the zone. And exactly S&P 500 did the same. Other than that, 4497. So we have seen that 4497, then we have 4477. Okay, similarly these are the support and resistance levels. So these are my own calculated support and resistance levels, and again historically they have proven themselves, right? So I will give you the support and resistance levels for the coming week. Then comes the third point of the agenda. This is the CPI, PPI, inflation, and yes, the dollar index. Dollar index. Now something strange is happening in the dollar index as of now. Okay, see, if you are a currency trader or if you also trade in the currency. Okay, so as of now, dollar index is at the point or is at the level, okay, wherein we are expecting a reversal in the dollar index. Okay, so when there comes a reversal in the dollar index, and at the same time, if there comes a reversal in the bond yields, 2 year and 10 year, okay, these are bond yields. In that case, what happens is that the stock market goes down, right? So that is why I'm going to discuss the dollar index, inflation. Okay, yes, the inflation also. So technically, okay, I will show you that for last 7 months or 8 months, okay, it is at this the bottom, and now it has hit this the new level. So CPI, PPI, inflation, and dollar index. The fourth point of the agenda is the S&P 500 technical analysis on the daily chart. So this was the weekly chart, technical analysis on the weekly chart. Now this is the S&P 500 technical analysis on the daily chart. So daily chart, okay, as such, again, so this means something significant that is happening is this particular thing is happening in the Dow Jones and not the S&P 500 at the moment. Okay, although S&P 500 is at the levels where it is overpriced, okay, and overbought, right? But still, okay, because we are doing the technical analysis, we need to look into the technicals, the candles. So that significant thing is again happening on the daily chart of the Dow Jones, right? So on the weekly chart of the Dow Jones as well as on the daily chart of the Dow Jones. So I will show you, okay, how this thing is happening. Then finally, I will discuss the fifth point of the agenda, that is the probable movement of the S&P 500 from July 17th to July 21st. So just like the last week, that if certain conditions are met, okay, so for example, last week I mentioned that on Monday either there will be a gap down open, or irrespective of any open, at first it will come down and then it is free to go, free to move wherever it want to move. So we have seen there was this the gap down open on Monday, okay, then it turned bullish, okay, and then bullish also. And other than that, if the S&P 500 clears, okay, this the level, this particular level, in that case what will happen, it will further move up, else it will not, right? So similarly, I will tell you the probable movement of the S&P 500 for the next week, that is from July 17th to July 21st. So July 21st will be Friday. So guys, if you want to get these the daily updates, the daily analysis of the S&P 500 and also the stock market opportunities in the premium stocks of the US stock market, then I've given the link in the description of the video and also in the comment section. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Guys, I would like to add a small disclaimer to this S&P 500 technical analysis, that after watching this S&P 500 technical analysis, what you are going to trade into, how you are going to trade, that will be your own decision, which is why whatever profits and losses are going to happen to you, that will be all yours. Now guys, I am going to discuss the first point of the agenda of this S&P 500 technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. One candle represents 1 week, not 1 hour or 1 day or 1 month. One candle means 1 week. Okay, so as such, when we look into all of these are technical indicators, okay, so all of these are technical indicators looks bullish. Yes, recently we have seen the stochastic RSI that has changed from bearish to bullish, okay, and in terms of the divergence, in terms of the saturation, yes, that is increasing in the S&P 500. So the most important part here is the stochastic RSI, that the stochastic RSI it has just turned from bearish to bullish, right? So as of now, the S&P 500 is 100% bullish through all of the technical indicators on the weekly chart. Yes, it is bullish, okay, but at the same time the divergence is increasing, the saturation is increasing, and it is trading what we call is okay, this is the overpriced or the overbought, this is the condition, okay. Now the other thing that I wanted to show you, okay, that is the chart of the Dow Jones. Now this is the chart of the Dow Jones, and let me show you the weekly chart of the Dow Jones. Okay, now this is very much interesting. So when we look into this, the weekly chart of the Dow Jones, okay, so what you are going to notice here is that this particular candle of the Dow Jones, the last candle, okay, the weekly candle of the Dow Jones, okay, if you look into the candle of the S&P 500, okay, it has closed above the open of the previous weekly candle. However, this is not in the engulfing position, right? So that is why we are not going to consider this as engulfing. However, when we look into this, the Dow Jones, or Dow Jones, if you notice that open of the candle, this price, open price is lower than the lowest level of the low of the previous candle. So low was the 33,716 of this, the red candle, okay. This, the candle of the Dow Jones, it opened at 33,705, okay, number one. Number two, that closing of this candle is above the high of this candle, right? This means that this particular bullish candle has completely engulfed the previous very heavy bearish candle, okay. This is the engulfing, absolute engulfing. Now what does the engulfing means? Okay, engulfing, it means, and when I was doing some research, and I've means this is something that has happened, okay, after like 4 or 5 years in the Dow Jones on the weekly chart, okay. Otherwise we have not seen this thing happening in the Dow Jones. So engulfing means that whatever is the color of this candle, okay, this is the green color. This means that on Monday the sentiments, okay, initially whatever will be the sentiment, these sentiments will be of the same color, that is the green color, okay. Means there will be bullish sentiments on Monday, at least initially. Not just on Monday, but for the entire week there will be bullish sentiments. Even if for some reason S&P 500 and the Dow Jones, it comes down heavily, then also we can see that at some point of time, okay, it will reverse, okay, because of these the bullish sentiments. Okay, one more thing about this, the bullish engulfing is what happens is that the next candle that is going to form here on the weekly basis, okay, means for the next week. See, this is technically this must happen technically, okay, and this is how it works. Next candle that is going to form here, that must be either a green candle of the same color, a green candle, okay. And if not the green candle, then it should be a small bearish candle or a thin bearish candle. So maybe, like, you know, it moved up, then it came down heavily, then there was a reversal, okay, and then it closed like something like, okay, this kind of candle, okay, then also this will be acceptable. So no matter what, okay, so this is the technical definition of the engulfing, and this is how it should work. However, this will be heavily impacted by the recent movement of the Dow Jones itself. So Dow Jones, even though it has given this the bullish engulfing, but it has created a problem for itself, okay. So that I will talk about on this the daily chart, when I will cover the technical analysis on the daily chart. Other than that, when we look into the Dow Jones, the weekly, okay, this the thing, the on the weekly chart. So on the weekly chart, the stochastic RSI is still bearish, okay, there is still no change. Other than that, the MACD is looks like MACD is heavily confusing in case of the Dow Jones on the weekly chart, okay. So overall, the thing is that yes, the S&P 500 on the weekly chart is 100% bullish, absolute bullish, okay, but still there are some constraints, okay, that are not only because, see, as of now S&P 500, the only problem in the S&P 500 that it is overpriced and overbought, that's it, nothing else. But the actual problem in the S&P 500 is coming through the Dow Jones. So guys, now let's move on to the next point of the agenda, that is the support and resistance levels for the S&P 500 for this the coming week. So once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also you can join my Patreon community for the daily analysis and the daily updates of the S&P 500. Now guys, I am going to discuss the second point of the agenda of this S&P 500 technical analysis, and in this the second point of the agenda, I will give you the support and resistance levels for the S&P 500 for this the coming week, the next week, okay, that is from July 17th through July 21st. So this the support and resistance levels, as of now, if you notice that 4527, okay, it is going to hold the movement of the stock market. Okay, movement of the S&P 500 actually. Okay, then from 4527 to 4537, 4537. Okay, so 4537, 4537 and 4527. So this is a very strong resistance zone for the S&P 500, and these are the calculated levels, right? Then after 4537, then we have 4550 and then 4573. Okay, now S&P 500 is free to move beyond this zone provided that it spends at least 2-3 days, 2-3 days, okay, at or around this zone, and must show its reluctance. And there is one more thing, that you can compare this 4527, okay, similar to what we have seen at 4291, 4291. This was 4291, okay, of like this the similar means this was the heavy resistance. Similarly 4527 is heavy resistance. What happened, okay, here at 4291 is that the S&P 500, it moved up, then it has shown its reluctance to breach and to sustain beyond 4291, okay, for 4-5 days. Then there came this the news, okay, based on that news and plus some speculation, it was able to clear the 4291, else it was not supposed to. Okay, so it moved up. So we have seen that for 4-5 days S&P 500 was struggling to breach 4291, right? So this is the similarly 4527, okay, is of the same kind, okay, with the same heaviness, okay, with the same importance as of the 4291. Now okay, this is one part. Other than that, okay, if you look into this the picture, okay, historically, so historically what we have seen, this was 4527, then 4537, and then when the S&P 500 was moving up heavily bullish, extremely heavy bullish sentiments, extremely heavy. As of now there are bullish sentiments, good bullish sentiments, but not heavy as they were back in 2021. So even when it was moving up, okay, this in the year of 2021, then it came into the zone of 4527, 4537. It even tried to move up a little more to like 454 something, 45, okay, something. Then it gave up, and then we have seen very heavy correction, very heavy correction. So that correction from this level was approximately this much, 6%. This means that when there were extremely heavy bullish sentiments, S&P 500 failed to clear this the zone. It gave up and it came down by like 6%, okay, back to this the 4291. It came to 4291, okay. So this is, okay, this thing 4527, 4291. It came back to 4291. Then only it was able to regain its bullish movement, right? So recently what I have mentioned here, okay, and again this is the same picture. So recently what I have mentioned here, that S&P 500 has struggled around 4291. It moved up, okay, it moved up. Then when it was coming down, okay, it was supposed to come down back to the 4291, okay, around this zone, and then it was supposed to get a bullish reversal. But then okay, in the middle of this thing, okay, we have seen that on this 27th of June, S&P 500, for no reason, okay, for as such no reason, but just based on the speculation, it moved up, and since then it was moving up. That is why, okay, the S&P 500 and the primes of the S&P 500 are currently overpriced. For example, Apple, Microsoft, Google, they are overpriced, okay. So as of now, okay, it is moving up now. So what I was trying to say is that the 4537, okay, sorry, not 4537, 4527, okay, 4527 is of the same importance, okay, and is almost, or not almost, but is same as 4291. This means that S&P 500 must spend some good time here. Now the 4527 is going to okay, get this the support of 4537. 4537 is okay, not exactly 4537, it is 4534, 4534. That is the 78.6% of the Fibonacci retracement level, okay. Earlier we have seen that it was only 4527, no Fibonacci, nothing, okay, but this time it is 4527 plus 78.6% of the Fibonacci retracement level, two factors. Then we have 4537. So this is very heavy strong zone. Now does that mean that the S&P 500 cannot breach this very heavy, with this very heavy strong zone? No, it still can. It can breach this very heavy zone of 4527 and 4537, but it won't be able to move up heavily, because as soon as it goes above this the zone, okay, it will see, as of now it is already, this what we say, it is already unstable, and that is why it is overpriced. Okay, so even in the condition wherein, okay, if the Feds says, okay, that there will be no recession, everything is good, and even if they are going to cut the interest rates, okay, and they will not raise the interest rates, then also as of now the S&P 500 is in a condition that it is overpriced, so it must come into a little correction, okay, like 4291, yeah, 4291 will definitely, okay, it will be in the picture, below 4291, okay, and then it can resume, okay, its long term bullish trend, so that's not a problem. And one more thing guys, you need to understand, the default direction of the stock market is bullish. It always goes bullish. Yes, after a few years there comes a recession, okay, like 7 to 10 years there comes a recession, then every 2 or 3 years there comes a correction, right? So that is the natural phenomenon that happens in the stock market, but the default direction is bullish. But that does not mean that every time and every day the S&P 500 will move up and up and up, and the stock market will always move bullish. No, that is why we have the corrections and the recession. Whenever the correction happens and the recession happens, it goes heavy, okay, as compared to the, because the bullish direction, the bullish movement, it is slow, but the bearish movement, it is heavy. Okay, so this is how it works. These are the basic principles of the stock market. Anyways, so I was talking about these are levels. I hope this picture is clear. So 4527, then we have 4497. Okay, this is the 4497, very very good support. Okay, then we have 4477, then 4462. Now yes, the 4462, 4462 is the very first level. So as soon as the S&P 500 gives up 4462, then it will be coming back, okay, back to like what we say 4396, okay, or 4400 or so. Okay, then we have 4445, then we have 4425. Yes, 4425 again a very good support. 4396 has recently given a very good support to the S&P 500. Okay, 4371, 4371 as of now is seen, okay, as a level that if the S&P 500 fails to sustain at 4371, then there are very heavy chances that it will be coming back to 4291. Okay, then we have 4343, 4310 and 4291 itself. Okay, as of now when the S&P 500 comes down, okay, from this level like 6% or something, so 4291 will be able to handle that fall. Okay, for see, as of now we are not expecting a very heavy fall, a normal bearish movement, okay, a little fall 2-3% is fine, that's not a problem. Okay, but even if for any reason if there comes a very heavy fall, then also 4291 will be able to handle that heavy fall. So guys, there is one more thing, that if you want to join my Patreon community for the daily updates, daily analysis of the S&P 500 as well as the stock market opportunities in the premium stocks, then let me tell you that how you can join my Patreon community. So guys, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then so when you see that the level is that the daily S&P 500 update, this is for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents. And this is the third tier, that is the market opportunities and daily updates. So it will be discontinued very soon. So daily S&P 500 updates means that you will get the daily updates, the daily analysis of the S&P 500 from Monday through Friday. So you will get the pre-market update before the open of the stock market, so that you are aware of the things like what is expected to happen in the stock market and in the S&P 500, okay, today or on that particular day. And then before the closing of the stock market, okay, again the final update, so you will come to know that what is expected to happen tomorrow, right? So that is the daily S&P 500 updates and daily analysis. Other than that, now the market opportunities are the part of the daily updates, daily S&P 500 updates and daily S&P 500 analysis. So when you subscribe to the daily S&P 500 updates and analysis, then you will get the daily S&P 500 updates from Monday through Friday, as well as the stock market opportunities in the premium stocks. So when I say stock market opportunities, okay, so these are the kind of stock market opportunities that are given the premium stocks of the US stock market, like United Health. Okay, this is the prime stock. This is the prime contributor to the Dow Jones, CRM, Salesforce, Bank of America, Home Depot. Okay, and then Boeing, okay, Honeywell, Microsoft, Apple. Okay, these are premium stocks. So I give these the opportunities in the premium stocks every week, 5 to 10. Now if you see that many members have joined my Patreon community for last many weeks, many months, and they are getting the daily analysis, the daily updates of the S&P 500, as well as the stock market opportunities in the premium stocks from Monday through Friday. So these the opportunities, okay, in the premium stocks along with the daily S&P 500 updates and analysis. Okay, so you will get once you join and once you subscribe to my this the Patreon community. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis, and the third point of the agenda is the CPI, PPI, and inflation and dollar index. Okay, DXY, dollar index. Okay. So at first, yes, the inflation itself. Okay, so no change in these the technicals of the inflation. So for last 7 or 8 months, the inflation is trading at absolute bottom, and now it is hitting these the oversold. Okay, these the condition means overall all of these are technical indicators are at this the saturation level, as simple as that. Then the PPI. Okay, yes, one more thing. Okay, in the CPI, that whatever we have seen here, this is the headline inflation, not the core inflation. Okay, and Feds are concerned about the core inflation. They are not much concerned about the headline inflation. Core inflation means when you exclude the energy and the food prices, then that is the core inflation. Okay, like all other sectors. Okay, housing sector, real estate sector, okay, manufacturing sector. Okay, means these are multiple sectors. So the core inflation, okay, it now very first time, earlier the core inflation, okay, it was trading like 5.3%, 5.5%, 5.4%, 5.6%, but this time, very first time, the core inflation has come down to 4.8%. Okay, so this was very much significant. Okay, and that actually gave this the bullish push to the stock market, not just the US stock market but the global stock markets, right? So that is the headline inflation. So we are done with the inflation. Now the PPI, so producer price index. So recently we have seen the producer price index, that the producer price index, okay, the headline, okay, again this is the not the core PPI, okay, but this is the headline PPI. So we have seen that the producer price index, it has moved up, means the producers are asking more money for their produce. So whether they come from the commodity sector or the service sector, okay, they are asking for this the more price. So Wall Street was expecting a decline, however it came, okay, against this the Wall Street, okay, and again it is more than the previous month. However, the core PPI, okay, it came as per the expectations of the Wall Street. That is why, okay, the PPI and the core PPI, okay, it was seen as neutral, neither negative nor positive. That was the reason the S&P 500 was able to move up to hit 4527, right? So PPI, core PPI, okay, this is the thing, means as of now, when we look into the inflation and these things, looks like that the inflation is coming down, and at the same time, okay, the prices are elevated. Okay, so for everything the prices are at the peak, okay, or at this the elevated level. Okay, anyways, now comes the dollar index. Yes, the dollar index. So what's with this the dollar index? Technically, when we look into this the dollar index, okay, so dollar index has already lost, okay, it's this the standard supports. Okay, so it was coming down heavily, fine, that's fine, okay, not a problem. However, what has happened is that, okay, yes, when we look into historical, okay, these are levels, then again, okay, it has come to these are levels. Now when you look into the technicals, okay, as of now it is trading beyond these are technicals, but at the same time, if you look into the divergence and the saturation, okay, so it is not saturated, rather, okay, like it is at the, okay, at this the zone where we will say that it is not saturated, but it must saturate a little, it must be saturated, it must saturate a little. All of the stocks, okay, they must saturate, means nothing can be negative, okay, these things must be positive, as simple as that. Okay, in simple words, negative, positive. Okay, so that thing, other than that, okay, divergence, so no, divergence has come down to the levels where it was not supposed to be. Okay, the bearish divergence. Okay, so as of now the technicals are indicating a reversal in the dollar index. So what's with the reversal, okay, in the dollar index? So what's the problem, okay, if the dollar index, okay, if it gives a reversal? Dollar index, reversal of the dollar index means the dollar will become stronger against some other means all of these are currencies, okay, whether it is euro, okay, Japanese yen, Canadian dollar, or Australian dollar, or whatever, okay, against all of the currencies the dollar will become stronger, okay, and these currencies, other currencies, okay, they will be a little weaker. Now that is one part. The other part is that the bond yield, the bond yield. So 2 years bond yield and the 10 years bond yield. Okay, no change. 2 year is more than the 10 year still. So dollar index is going to give, okay, this a reversal. Other than that, if the bond yields 2 year and 10 years, if they also reverse, okay, then the concept says, the concept says that we have the stock market, we have the dollar index, we have the bond yields. Okay, when the dollar index goes down, bond yield goes down, then the stock market is free to move up without any issues, without, okay, any problem, or even if it face some kind of hurdle, then also it can hold. Okay, if the dollar index moves up, if the bond yield moves up, then the stock market, okay, then there comes bearish sentiments in the stock market. Okay, so this is how the concept works. So if you have subscribed to my YouTube channel for last many months or years, then you know that this is historically, okay, again and again we have seen this thing happening. Okay, this happens. Okay, so this is why I wanted to discuss the dollar index and the bond yield. So I hope the picture is clear. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also you can join my Patreon community for the daily updates and daily analysis of the S&P 500 as well as the stock market opportunities, minimum 5 to 10 every week. Now guys, let's talk about the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. So this is the daily chart, right? Let me write it down, daily chart. So daily chart means that the one candle represents one day, not 1 week, 1 hour or 1 month. One candle means one day. Earlier we have seen the, this is the weekly chart. Means weekly chart means one candle is 1 week. Daily chart means one candle means one day. So one candle means one entire day. Okay, now when you look into the candle itself, it's a bearish candle. Okay, we cannot call it as a hammer, okay, or any specific kind of candle. We will simply call it as a bearish candle. That's it. Okay, now there are two things. Number one, it hit 4527, failed. Number two, it came down but found support at 4497. 4497, okay, 4527. It managed to hold in this particular zone. This means that even though it is bearish, but it is showing signs that the S&P 500 it want to hold. Okay, as simple as that. So that is the interpretation of this, the candle. Okay, yes, there is one more thing that I want to show you, and that is there in the Dow Jones. Okay, this is important. Okay, as of now the technicals of the Dow Jones, okay, fine, not a problem. But what is important in the Dow Jones is 34,532. Okay, if you look into the candle, so yesterday if you have noticed that JP Morgan, then Wells Fargo, Citibank, okay, other than that, yes, the primary contributor to the Dow Jones, United Health Group, UNH, they posted the earnings and the earnings were good, okay, above expectations, and we have seen these stocks were moving up. However, when the financial stocks were moving up, United Health Group was moving up, the primary contributor to the Dow Jones. The Dow Jones failed to give a significant movement. It failed to give a significant movement. Yes, it was under technical obligation. It was under technical obligation that says that 90%, 98% of the times the Dow Jones must give a gap down open, or irrespective of any open, it must give a red candle. Okay, but because there were earnings yesterday, okay, on Friday, these earnings actually saved the Dow Jones. Okay, but at the same time, even with these the heavy earnings, better than expected earnings, very good movement in these stocks, the Dow Jones failed to get the bullish movement and the momentum. Okay, even though it looks like a bullish candle, but the problem is that the 34,532, the Dow Jones failed to clear. Okay, I'm clear does not means breach, clear means closing. It failed to close above 34,532. What exactly, okay, is this the 34,532? What's the story with the 532? 532, 532, 532. Okay, 532, 532. Okay, again and again. Last time we have seen in April 2022. Okay, since then, okay, it is trading below 532. Okay, so yes, in the month of November 2022, it moved up. On one day it closed above 532. Okay, but because as per the concept we need two consecutive closings, the other day it gave up. That was clear. Now the stock market is giving up. Came down again, it tried to move up, came down, move up, came down, came down, came down. Okay, again and again it has tried to clear the 34,532. It has failed. Okay, that's the problem. So it is actually creating a problem for, means the Dow Jones is creating a problem for itself, as well as it is creating problem for the S&P 500. Okay, and also in some manner to Nasdaq. However, Nasdaq is a different thing. Okay, so Nasdaq means the movement is it is totally okay different. So while the S&P 500 and Dow Jones are considered as the stable index or stable indices, Nasdaq is not considered okay as an stable index because it trade differently. Okay, it even goes many times against the technicals, right? So this is the thing here. Now I will talk about the impact of this thing, okay, in the next point of the agenda. So as of now, okay, on this the daily chart, so we have seen the candle of the S&P 500 as well as on the Dow Jones, as well as of the Dow Jones. In terms of the technical indicators, everything is good, bullish. Yes, the divergence is increasing, overbought, overpriced, the same thing. Okay, nothing has changed. Okay, so as of now, through all of the technical indicators, S&P 500 is clearly bullish, absolute bullish or 100% bullish. And the same problem, it is overpriced, and it is overbought. Okay, simple. Now let's move on to the next and the last point of the agenda, that is the probable movement of the S&P 500 from July 17th, and that is Monday through July 21st, that will be Friday. Let's see what is going to happen in the S&P 500 in the next week until Friday, that is July 21st. So guys, I hope that you have watched all of these sections of this S&P 500 technical analysis, because I have discussed okay a lot of things in these different sections. Okay, and I've shown you on the charts. Okay, that how okay the engulfing is going to work. Okay, on the weekly chart, then on the daily chart, how the Dow Jones is influencing the S&P 500. Then in the dollar index, okay, and the bond yield, okay, the current situation, okay, etc. And then in the part of the support and resistance levels, okay, I have shown you the historical movement, okay, around 4527 and 4537. Okay, so I hope all of those things are clear. So now in the next week, there will be retail sales data will be published. Okay, number one. The number two, the building permits. So retail sales will tell us that how the consumers, okay, this the consumer market is okay doing, whether it is good or bad. Okay, and whether people are still buying more and more. Okay, or if there is some decline. Okay, in that in the retail sales. Other than that, the building permits means the real estate. Okay, that means the housing market. What is happening in the housing market also. Okay, so these are the only two data. Okay, this is the economic data. Okay, that is going to publish the next week. Otherwise, okay, nothing as such. Okay, so what other than this, okay, these two things, what is there in the picture for the next week that is going to heavily influence the movement of the S&P 500? So 4527. Okay, then just after that we have 4537. In between these two we have 4534. What is 4534? This is the 78.6% of the Fibonacci retracement level. Okay, from the all-time high to the recent low. Okay, absolute low. So that is 4534. 4527 is my calculated very heavy resistance level. Then we have 4537. Okay, back to back, this is very heavy zone, very heavy zone, right? Then we have 4550, and last time during this heavy bullish movement back in 2021, S&P 500 failed to clear this zone even with the extremely heavy bullish sentiments. But this time those extremely heavy bullish sentiments are not there. Only good bullish sentiments are there. Yes, the speculation is there, definitely the speculation is there, and everyone is buying and buying. Okay, but not exactly the same thing that was there in 2021, quarter 4 of 2021. This means that when the S&P 500 failed, even with the extremely heavy sentiments, but this time there are only good sentiment. This means, and then we also have now 78.6% Fibonacci retracement level. Earlier this was not there in the picture because that time the S&P 500 was moving up. Yes, it is possible that the S&P 500 may breach this zone. But what we must understand that even if the S&P 500 breaches this zone, then also no matter what, the zone of 4527, 4537 must be respected in a manner that the S&P 500 must spend a few days. This means that even if the S&P 500 breaches this zone, then also again it will be coming back to the zone within a day, intraday, or the next day. It will be coming back to the zone. This is how it works. Okay. So it can breach, yes, I'm not denying the fact that it cannot, even though this is a very extremely heavy resistance zone, it can breach because as of now, okay, the speculation is heavy, okay, and then and other than the speculation, the technicals are also supporting this, the bullish movement, okay, and everyone is now buying for this the long term, okay. However, the long term picture might be different, okay. Anyways, so it can even breach, but again, okay, either intraday, okay, or in a day or two, again it will be back to this the zone. So in short, for 2 days, 3 days, 4 days, for a week, the S&P 500 must remain at or around this zone. As simple as that. Now, as per the Fibonacci retracement concept, see, we have Fibonacci retracement. Fibonacci retracement. Retracement says that as soon as the S&P 500 moves up, okay, it must show reluctance to breach this the level 4534. Okay. At or around this level, the S&P 500 must give up. It must give up in a manner that it must come down. Okay, see, as per the concept, it must come down to 429. Sorry, not 4291. It must come down to 4312. 4312. What is 4312? 4312 is the 61.8% of the Fibonacci retracement level. So, as per the technical theory, technical concept, technical understanding, from 78.6%, it must come down to 4312, right? But as of now, because the sentiments are extremely heavy, okay, plus the technicals, plus the speculation, okay, everything is there. Okay. This means that it may not come to 4312 within a week, within a day or so, okay, until and unless there comes means until and unless, okay, everyone start to sell, right? This means that if there comes a fall, then yes, to this level is what? This level is 4396, 4396, then this level 4324. So after 4396, then only, okay, it can come down to 4312, right? So in short, okay, this means, okay, let me clear this the screen. So in short, this means that because there is very heavy, okay, extremely heavy this thing. So in order to move up, S&P 500 can breach, not a problem, but again it will be back to this the level, and it must means at least the next week, okay, it must remain around this zone. Now there is the case, the second case, considering the technicals, okay, this the technically it is bullish, okay, but at the same times, okay, technicals are restricting this the movement. So considering that there comes a speculation, okay, or maybe some news or something, and the S&P 500 breaches this heavy zone within a day or within 2 days, okay, or within a day, it breaches this as the zone, okay, there comes a very heavy bullish candle, okay, and it try to move up, okay. In that case, what will happen? In that case, it can move up to a maximum of 4573. 4573. But in that case, the only problem is that if it moves towards like 4573, then yes, in that case, we can expect a fall up to 4312. Okay, because in that case, it will be extremely unstable. Okay, because it has breached this the zone, and now it is extremely unstable. It failed to respect the zone. Okay. So that will be the reason. So that is the case. Now other than that, if there comes any open that is below 4527 on Monday, Okay, in that case, yes, S&P 500 can still try to hit and to retest the zone 4527, 4534, 4537. This is the zone. Yes, it can. It can. Okay, technically it can. Okay. When it does, and again, if it shows similar kind of behavior that we have seen earlier, okay, in the case of 4291, okay, this kind of behavior, it moved up, gave up, red candle, then again this, then again this, and then again this. For an entire week it was there. Okay, so if it gives up, if it fails to breach the zone, then again it will come down. Okay, now in order to come down, or in order to come down heavily, it must close below, 4500. As soon as it closes below 4500, but this must happen on Monday, remember, this must happen on Monday. As soon as it closes below 4500, then yes, on the subsequent days it can further give up, and then we can expect that it will be coming down to 4425, and this is the 4396. Okay, 4425 and 4396. Okay, that is possible in that case. However, if the S&P 500 is able to close above 4500 on Monday also, okay, in that case we will see this, okay, like, you know, that the S&P 500 is holding. Okay, it is neither moving up, okay, because of the heavy resistance, nor it is giving up, right? So in that case, the only condition or the only thing is that S&P 500 is going to hold, just like this thing, okay, we have seen around 4291. So it has to fulfill its technical obligation, and it is fulfilling its technical obligation. Simple. Okay, if it comes down, to these the levels, okay, then yes, in that case again, okay, it will try to move up, but this time, because it will be able to fulfill its technical obligation, again for 1, 2 or 3 days it has to spend here. Okay, then again test, retest or so. Okay, but yes, as soon as it gives up this the 4385 level, okay, in the next week when it gives up 4385 level, then it will be coming down to 4310, 4312 and 4291. Okay, so that is the thing. So this means that S&P 500, okay, on Monday, see, on Monday this thing will be clear that whether the S&P 500 wants to hold or not. Okay, now when that happens, okay, so on Monday, okay, through these the daily updates, okay, pre-market and final update, I will confirm, okay, what we are expecting. Okay, so if you are my Patreon community member, then I will update you through these updates. Anyways, now let's talk about the Dow Jones. Okay, because it is actually the Dow Jones that is not supporting this, the S&P 500, okay, and all of these the movement. Now the problem with the Dow Jones, as I mentioned earlier, that 34532, okay, historically I have shown you this thing. Okay, so if there comes another failure on Monday, means if there comes a candle that closes below 34532 on Monday, okay, in that case what will happen? In that case the S&P 500 will most likely close below 4500, or below, or if not, then again in between 4527 and 4500. Okay, if the S&P 500 closes in between 4527 and 4500 on Monday, but at the same time, if the Dow Jones closes below 34532, in that case the S&P 500, this is the particular condition of holding. Okay, this might not work, because the Dow Jones will be closing below 34532, and that will be again seen as a failure. Okay, this is a failure again and again. Okay, in that case on Tuesday, okay, or on Monday intraday or Tuesday onwards, okay, the entire stock market, okay, it can give this the bearish movement, right? So the only condition, the technical condition, I'm talking about the technical condition, I am not talking about the data, okay, speculation on these things. If the Dow Jones closes above 34532 on Monday, or maybe on Tuesday, let's say on Monday it try to move up, but it is able to hold, okay, then on Tuesday, when the Dow Jones closes above 34532 first candle, then we need second candle, first candle, second candle, two successive candles above 34532. When the Dow Jones closes above 34532, there comes two successive candles, two consecutive closings above 34532. In that case, even if the S&P 500 is going to give a bearish movement, in that case S&P 500 will not give any bearish movement. In that case, the entire stock market then it will be able to, either it will be able to move up or it will be able to hold and sustain. That is why if you look into my these updates, pre-market update or the final updates, okay, I always consider the Dow Jones, okay, along with the S&P 500, because then only we are able to get a clear picture of what is most likely to happen. So I hope these conditions, these things are clear. Now there is one more thing that is not technical. This is non-technical thing. As we all are aware of this thing, that this is the July month. The month of July, okay, is the earnings. Okay, companies are posting their earnings. Okay, for quarter 2 earnings, companies are posting the earnings. Just like we have seen the financial stocks, JP Morgan, okay, Wells Fargo, Citibank, and then the other stocks like United Health Group. Okay, they have posted the earnings. Similarly, okay, more companies are going to post the earnings. When the tech stocks, the primes, Apple, Microsoft, Google, okay, Meta, okay, Nvidia, well, when these tech stocks, when these companies, when they are going to post the earnings, or when they post the earnings, then we can see very heavy, extremely heavy movement in the S&P 500 as well as in the Nasdaq. Okay, because these are the only two these are the only two indices, okay, that have given, this heavy weightage to the tech stocks, right? But now one more thing about this, the earning season, that generally whenever there comes the earning seasons, okay, see, again I repeat this thing, and let me clear this thing, that this thing is non-technical, right? This thing is non-technical. So generally when there comes the earning season, okay, earning season, it generally goes bullish. I'm not saying 100% of the times, but yes, 80 to 90% of the times the earning season, okay, it goes bullish, right? But that actually depends, the bullish movement, it actually depends, okay, on the earnings, when the primes, when the giants like Apple, Microsoft, when exactly they are going to post the earnings. Okay, so this is the non-technical thing. Okay, so but the technical part is there. So I am not recommending anyone to go bullish, okay, based on this the theory, or based on this the assumption that because 80 to 90% of the times, okay, it remains bullish, this means that you should also go bullish. No. Okay, I am simply telling you, okay, what I have observed myself. Okay, whether you want to go bullish or you want to go bearish, okay, that is up to you. How you are trading in the stock market, whether intraday, whether for the short term or the long term, that is again up to you. I'm just doing the technical analysis, and I'm telling you that what the technical indicators are saying, what the candles are saying, what the support and resistance levels are saying, and what kind of situation we are going to see, okay, in the coming week. And if you want more clarity on the daily basis, then you can join my Patreon community, because in my Patreon community on the daily basis, I analyze the stock market, the S&P 500, the Dow Jones. If you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, hit like if you have liked this video. So guys, this is my S&P 500 technical analysis for the next week, that is from July 17th, which is Monday, through July 21st, that is Friday.